We talked about rupee every time it weakened. Started with 85 per dollar, came to 88, 89, 91, 92, and today it is at yet another historic low. Every time rupee weakens, it affects your fuel prices, it affects your pocket, and it affects your future inflation as well. It is not just about exchange rate, currency, or numbers. It is a chain reaction which is set in by global politics, oil prices, and so much more. So today we will be looking to understand that what has set off that rupee is yet again at a historic low. Hello everyone, welcome to Vajiram and Ravi's Flash News. My name is Shubhangi Singh, and today we are going to understand not just the concept of currency depreciation but also get into what has caused the rapid depreciation that we are seeing, especially for our Indian rupee. So when we are talking about this very depreciation, the main thing that we need to understand as of now is the fact that Indian rupee has slumped more than 2% since US-Israel-Iran war has unfolded. And as we speak, this number that I am talking about, this has gone to 94.106. So we are today talking about rupee touching yet another historic low where it is 94 rupees for each dollar. And when we talk about this number is not so much about just our economy. It is about the stress that our external sectors are facing, and it is also about the uncertainty, the continuous uncertainty that exists in the global economy. Now to understand this better, let us try to break this down and understand the concept itself of depreciation. So when we are talking about a particular currency, the depreciation basically means that there is fall in the value of domestic currency. Now you have to remember, whenever we are using the word depreciation, it is for the market determined system. If the central bank is deciding the exchange rate and value of the currency, it is not referred to as depreciation. Depreciation, the word, the key term will be only used if the market forces are deciding the value of domestic currency, and if there is a fall in that, that's when we will go by the word depreciation. Now tell me in the comment section, what is the term that we use when central bank depletes or reduces the value of domestic currency? Now when we are talking about fall in value, what does it mean? So let's just say $1 is equal to 80 rupees. So when we are talking about 80 rupees, that means if I want $1, I have to give 80 rupees. Now in a situation where $1 will become of 60 rupees, that means our currency's value is increasing. We have to give less to get more. Similarly, if our currency is costing 90 rupees for $1, that means we have to give more because the value is less. So this is the concept that says centered around depreciation. Now because our currency has arrived from 80, 85 to now 94, this is the fall in the value, and this can be easily termed as depreciation. Now you will be asking, ma'am, how this fall in value is happening? When I am saying market determined system, it clearly works on the fundamentals of supply and demand. Supply of what, ma'am, and demand of what? Supply and demand of currency. Whichever currency will be in demand and the supply is not present, it is limited. That means the value will increase, just like we do it for any other commodity. But if people are not demanding that currency, people are demanding other currency, that means the domestic currency or any other currency, their value will fall. So this is exactly what is happening with rupee. Because dollar is getting strong, the demand for dollar is increasing in the uncertain world we are living in, rupee is becoming weaker. So in any situation, if demand for dollar will increase, or if the supply of dollar will decrease. That means demand is higher than supply because of any reason, because the demand increased or the supply decreased, we will find that the value of rupee will start decreasing. Now, when we are talking about India's system, India does not go by fully market determined system. India does not go by floating exchange rate system, it goes by managed floating exchange rate system. That means RBI can intervene and help this situation. If the supply for dollar is decreasing, RBI can put in dollars in the market and maintain the supply so that the value of rupee that is decreasing, that is stopped. Now we have understood what exactly is depreciation, what do we mean when we are saying that rupee has touched historic low in terms of depreciation. Now let us move to understand what are the major causes present here. So the first clear cause that is present here is the West Asian conflict that is present in front of us. That West Asian conflict has led to the problem of rising crude oil prices, and this is one of the primary factors because of which depreciation is taking place. Because oil prices are rapidly rising, India is an import dependent country in terms of oil and gas. Now number here is as huge as 80%, and because of that, when the oil prices are going more than $100 per barrel, our import bill is increasing. Now we have to pay this import bill in dollars, correct? Now the demand for dollar is increasing. If the demand for dollar will increase, what will happen to rupees? The value will decrease. Now another reason which comes into this play of depreciation is the fact is the uncertainty which has created chaos amongst the investors. Now investors do not want to invest in places which have uncertainty. They would want to move to safe haven assets, the metals, gold, silver, US dollar, which is the global reserve currency of the largest economy. They want to invest here. Again, what is happening? Demand for dollar is increasing, rupee is depreciating. Another factor which is coming out in play because of the investors itself, the foreign institutional investment, that capital is moving out of India because they are withdrawing their capital. That means they are giving up the stake they have in the Indian economy. That means rupee is being sold. That means rupee's supply is increasing in the market. Again, value of rupee is decreasing. Furthermore, because investors are investing in the safe assets such as US dollar, and recently, 2 days before itself, the Federal Reserve, that is the central bank of US, decided that there will be no rate cuts. That means interest rate whichever was available in US, that will continue in the very same range. So that interest rate is assured. Now people who are withdrawing capital for developing countries, they are moving towards US. If they want to invest in US, they would use dollars. Again, demand for dollar is increasing. And India's widening trade deficit, because our import bill is increasing, that's why imports have to be more than exports, which is leading to a risk, external imbalance in terms of balance of payment itself. So all of this is mounting up to the sudden change that we are seeing. Because if you look at the given graph which we started with, this can clearly explain the extreme rise that we are seeing all of a sudden. All of the factors that we have talked about, 4 to 5 factors, they have mounted up in this time and responsible for this rise that we are seeing. Now we have understood the causes, let us move to understand what will come out of it. So when we are talking about this situation, this will lead up to inflationary pressure. Fuel prices have already increased yesterday. Imported goods will become more costlier other than oil and gas as well because of the transportation, shipping cost and insurance which is increasing. Because of the higher import bill, the current account deficit will further widen. And both of this will have a direct impact on growth. Why? Cost of production will increase. If the cost of production will increase, then there is a probability that the demand will take a huge hit. If the government wants to balance that off, there will be fiscal pressure on government which will also be increasing. And this part will be directly impacting the people on ground. They will affect their fuel, they will affect their food, it will affect their travel and so much more. In this depreciation of rupee that we are saying, we definitely see that there are certain sectors which will be benefited in terms of export, but this is a very limited positive. You might be thinking how this will help export. So let's just say sugar comes for rupee 40, 1 kg. Now if a person was paying $1 when $1 was 80 rupees, he would be getting how much sugar? He would be getting 2 kg sugar, correct? But now because $1 has become 94 rupees, he would be getting more than 2 kgs. So people would want to export more from the country because same dollar is getting them more. So we might be able to increase our export, but that would be not the net increase that we are expecting. The negatives as of now outweigh the limited positive that is lying in front of us. So what can be done? A lot of eyes are towards RBI, because if you remember, I talked about managed floating system, which is looked at by our central bank, that is Reserve Bank of India. Now because the demand for dollar is increasing, RBI might come and intervene and sell dollars in the market to balance the demand and control the forex rate. Other government measures, policy measures are already in place, such as diversifying energy exports, focusing intensively on exports and making sure that capital outflows are limited and inflows are increasing. This is a tough situation for not just for our currency but for our country as well. Even though the war is happening in our extended neighborhood, the heat, the burn and the threat are being felt across our country as well. What are your thoughts on this? Let me know in the comment section. That was all from my side. Thank you so much.